lot of times, no. Today, instant payment use cases are often peer-to-peer type of payments. B2B is starting slowly, but these high volume type of payments aren't in scope yet. And it's scaling up to be able to address these huge volumes of transactions per second that touches everything in the value chain in the bank. And a lot of banks aren't ready yet. What we need to get those huge volumes is looking at B2C payments. There we're looking at salary payments. We're thinking about pension payments. These type of high volume type of payments. Yeah. On top of that, we have EPI and Request to Pay, which just announced the pilot as well. So that can be cannibalizing some of those existing card volumes and putting them on instant payment rails. So I think most banks today aren't looking at doing something purely on-premise. I think where we need to make a distinction is payments as a service, which is the solution provider providing the cloud, and software as a service where it's the client that's providing the cloud. What I'm mainly seeing an appetite for is these clients that are looking to have solutions cloud-based, but to deploy them on their own cloud, their own instance of Azure, Google Cloud, or AWS. When we look at kind of the focus of banks, until last year, the last 5 years, it's really been on SMEs, these mid-sized corporates who do quite a bit of transaction volume, but don't have a lot of impact on price. We see a shift today with a lot of the larger banks on these global corporates. Why? Even though transaction revenues are down, net interest income is up, so they don't actually have to earn money on the transactions as much. They just want to attract those huge corporate customers because they deposit billions and billions of euros onto their account on which the banks earn net interest income. So we see this shift from what was a very hot sector, those SMEs, to again a focus being on large corporates.